You're now listening to the Tax Smart REI podcast. Thanks for tuning into this episode of the Tax Smart REI podcast. Today, we're joined with Emir Dukic, who is founder and CEO of Rabu, which is a short-term rental data and technology company that helps you find, analyze, and acquire short-term rental investments with their suite of free tools. Emir, thank you so much for taking the time to come on the show today. Would you be able to give our listeners a brief introduction to yourself and how you got involved in the short-term rental space?
Yeah, absolutely. First of all, Thomas and Brennan, thank you for having me. Excited to chat here today. A little bit of background on how I got started into short-term rentals. So I've been a technology entrepreneur and also a real estate buff for a long time. And my prior company, prior to starting Rabu, was called Kick. I was a VP of operations there. And it was acquired by NBC Sports. So as NBC was acquiring this company, I started thinking about what I wanted to do next. Right around that time period, my wife and I purchased a home in Charlotte, North Carolina, which is where I'm based, that had a detached garage and a room and a bathroom above that garage. First idea was, let me turn it into a man cave. This is where I can go hang out, watch football, play video games, do whatever. But we had two little boys at the time, I think a 2-year-old and like a 2-month-old, and me going into a separate, basically dwelling away from my wife and kids just wasn't going to fly. So decided to not go that route for the sake of my marriage. And being an entrepreneur, started to think, okay, what else can I do with this room above our garage? One morning we just decided, hey, why don't we turn it into an Airbnb, into a short-term rental, just hoping to generate some passive-ish income, maybe some travel money, something to cover some of our childcare expenses, right? So we furnished it. I had my dad, who was a wood craftsman, built some kind of cool wood furniture that really fit in with the neighborhood. It was more of like a transitioning neighborhood with really kind of eclectic style. So I had him build some really cool kind of handmade furniture. And we posted it in Airbnb, hoping to generate, $500-$600 a month. We would have been ecstatic with that. Next thing we know, this little 200 square foot room above our garage is paying the mortgage on our house. And we're like, holy smokes, like this is great. For house hacking, without really thinking we were house hacking, that wasn't the goal here. But this is amazing. And this was about 5 years ago. So still relatively early stages of the short-term rental space. So knowing that, I was at NBC, but only temporarily as part of a transition with the acquisition of the prior company, I started thinking, okay, I definitely want to do a company that I start myself next. Played around with some ideas, but just had this thing in my backyard above my garage that was making pretty good money. So I said, okay, well, maybe we can get a handful more Airbnb short-term rentals myself. So at that point, it was just my wife and I. We went out and got a handful more properties over like a 6-month time period, primarily multifamily kind of apartments within multifamily buildings and a few single family homes. And they all performed exceptionally well, had really good return numbers, were just cash flowing. So, we loved it. We knew we were onto something, but we were also at 5 short-term rentals with no real technology able to kind of help us operate it. So we realized that in order for us to scale this, we needed to invest into a back-end software platform. So I went to one of the gentlemen that was with me at Kick. His name is James Strong. He was the head of development at Kick. Said, hey, James, this is what I'm building. These are the returns that I'm seeing. Would you be interested in helping build out technology that helps us kind of operate these units ourselves more easily than the manual process that we're going through right now? So he liked it. He came in, we started building technology. Really, with initial idea being that we will build our own portfolio. But as we started talking to more and more investors, we started realizing that the opportunity and the need was in helping other real estate investors find, buy, and operate short-term rentals. So the original idea for Rabu is that we would be kind of the management arm for investors who are looking to grow portfolios. And we ended up publishing the data tool for free for our internal customers to evaluate properties, but that blew up. And now we're fully focused only on the data side. So it's been a long story. We've kind of seen the peaks and valleys of short-term rentals, gone through COVID and see what that initially looked like, and then how that rebounded to, the times that we're in now. So we've seen a little bit of everything.
So you guys started a property management company, and then you created the tool that is now Rabu for your customers, your internal customers. And what was the purpose of giving it to them for free? Like, it was just helping them kind of price units, or?
Yeah, absolutely. So a great question, Brendan. The question that we got the most from clients that we work with on the property management side is, hey, can you help me find a property to buy, or how much money can this property make? And there's some tools out there, some good tools out there that are behind paywalls that people could use. And we just didn't want to pay for those tools ourselves because we were a startup. We were trying to be cash efficient. So my co-founder, James, basically decided to build the tools himself for us to use internally. And the goal of that tool was to make it a top-of-the-funnel lead generation platform for our property management services, right? We would make it really easy for investors to find a property, to underwrite properties, to see what the revenue potential is. And hopefully through that process, those users would become property management customers for us. And that worked exceptionally well. We were able to grow our property management business from, 50 to 400 very quickly since we released that tool and made it public and free.
When was that inflection point, or talk about that inflection point where you realized, wait a second, this tool that we're giving away for free could actually be way bigger than the property management company? Like, how did you even recognize that?
It's been a process, to say the least. We made that tool. We released the pretty version of that tool in early 2022, and we saw really good growth for it. We saw 40,000 monthly active users, and the idea was at that point we want to kind of be the one-stop shop platform. We can help you find, buy, and then we can operate it for you. But as the user base grew of that tool, fewer and fewer people realized that we did property management. They knew us for the data platform and the power of the data platform and the simplicity of it. So, anytime we would then reach out to them, like, oh, by the way, what'd you decide on the management side? And they're like, oh, we're evaluating property managers. We're like, well, we do that too. There were a lot of times they were surprised. So the tool was so powerful and so successful in the sense of helping people find properties and identify revenue potential that they disregarded even the property management side of our operation. And while we were still able to grow that, property management is a hard business. And we made a big investment in property management. We built our own kind of back-end technology to operate it. We were able to, service over 400 properties across 30 different cities, all remotely with a team. But that side of the business just takes a lot of time, takes a lot of effort, and transparently is not valued as highly as a data or technology business. And us being a startup, having raised venture capital to build to this point, we realized that the core team had to focus on the thing that has most long-term value for all our shareholders, which, is the actual data platform itself. So, it was a process. It was a hard decision to make because we had invested a lot of time, a lot of money, a lot of blood, sweat, and tears into the property management business. And to kind of transition out of that was a hard pill to take. It's a lot of sleepless nights thinking through it, a lot of conversations with me and my co-founders. Hey, is this the right thing to do? But at the end of the day, we made that transition fully in May, and it was absolutely the right thing to do. Because even with this renewed focus from our team on the data tool, we're improving it and we're able to provide even more value to our users, which is now also, helping us in the back end from a revenue perspective. So it's been a win-win. It's also good reaffirmment that focus on one thing and be really good at it. Don't try to do too many things at once. It's easy to get lost as an entrepreneur trying to do, hey, what if it did this and this and this, and just you can quickly add up and not lead.
I feel that.
Yeah, isn't it funny how that works? It's a good reminder.
But it's interesting that you made that pivot from services to technology, or I guess data aggregation, because that's a heck of a pivot to make, especially if the property management company is successful and working well. How many active users do you guys have today?
So active users on the platform, last month we had right under 220,000 people using our platform to search for properties. It is, honestly, it's been amazing growth over the last 12 months, but especially the last 3 months or so. In May, we had about 110,000 users. We were ecstatic. And then to see it jump to 220 last month was just bonkers to us.
Crazy.
We think we're onto something.
So for the roughly 20,000 people that are going to listen to this episode, can you just briefly describe what does Rabu actually do? I realize we've been talking about the tool, but I don't know that we actually gave the elevator pitch on what it is. So describe what it does.
Yeah, absolutely. So think of us as the Zillow for short-term rentals. So we want to be the platform. If you are looking for short-term rentals to buy, if you're looking for properties on the market that be good short-term rentals, you can go to Rabu, go to the properties for sale section. You'll see properties that are MLS underwritten with our tool. to show you what the revenue potential is. So we can help you find properties to buy. So that's on there, free to use. Then we have market data. So we can type in any market in the United States on a zip code, city or county level, and do research on that market to see how many short-term rentals are there, what's the kind of composition of the unit types, 1 bedrooms, 2 bedrooms, 3 bedrooms, and so forth. What amenities drive the most returns? Really, what's the average cleaning fee that people charge? It's a really good research platform on any market that you're interested in. And then lastly, and our most popular tool is what we call revenue estimates. Think of it as the Zestimate for short-term rentals. So you type in an address, number of bedrooms, and we give you a revenue projection that's seasonalized that shows you, hey, this is what an average Airbnb can make in this area. And then we give you tools to go through your comp selection to actually find properties that are most similar to the one that you have or that you're considering buying, so that you can get a more refined revenue estimate for your property. So the idea is that we give you the tools that you can use to educate yourself to see if something is a good short-term rental, if it will make you the appropriate returns that you're looking for, and if it's something that you should pull the trigger on. And all that is free to use for anybody. Just all they need to do is go to data.rabbu.com.
That's awesome. That's awesome. How's it? I know there's some competitors out there. How does it differ from like AirDNA?
Yeah, AirDNA is a great tool. I would not say anything negative about them. They are kind of the number one tool in the space. They have the most traction out of anybody. They're different than us in a couple of ways. One, they're much more market data focused. So while we do have a market data component, they've kind of gone all in on the market data piece and have a really good, thorough platform to research markets and get data from them. We're much more advanced on the specific address level. So typing in an address and going really deep on an address, we have more information there, as well as properties that are available for sale. They are deeper than us on a market level. We also have different business models. They charge a fee on a zip code basis to get that market data. We make all that free. We generate revenue through advertising partners that are on our site that then want to serve you, help you buy a property, give you a loan for your property, be your property manager. So we often honestly encourage people to use both us and AirDNA when they're underwriting properties and researching properties, just because, you're not buying, a $5 stick of gum, right? You're buying a $500+ asset. So get as much data as you can. But we have a good relationship with them. We just have a different approach than they do.
That's interesting. So it's free to use. So anybody, short-term rentals investors who are listening to this, could go to Rabu and check out the platform for free. And you monetize it via the ads.
Correct. So again, it's very much a Zillow model. And if you don't want to click on the ads, don't click on the ads. But hopefully we've done a good enough job of finding the right partners that, hey, now that you're close to buying this asset, I can then connect you to the furnishing company who can get you the best deal on the furniture, get you to the right software company to provide the property management software, get you the right accounting firm so that you can make sure that your books are in order. There's a lot of opportunities out there that, because the short-term rental space is so still, Airbnb has been around for 10 years. Vrbo has been around for 20+ years, but short-term rentals, vacation rentals as an asset class are relatively nascent and new, and people are still trying to figure out how to operate it. So we want to give you the data to find the properties, but then connect you to the right resources to actually make sure that you're taking advantage of all the opportunities that are available within the short-term rental space, both from a revenue perspective, from a tax and cost saving perspective, and then from a performance perspective. So we want to be an education platform in that way.
I really like Rabu. I love your tool. And I know a lot of people in our insiders community, that's the paid community, not the Facebook group, also love the tool. Actually, I'm sure people in our Facebook group love the tool too. I just don't see it mentioned in there because it's mostly like, how do I qualify as a real estate professional?
Right.
But in our insider group, we have like deeper conversations about buying property and underwriting property, and then the tax benefits that come with that. And a lot of people use Rabu there, which is really neat. I remember when I was acquiring my short-term rentals back in 2021, I did not stumble across you guys, but I was using AirDNA. And the thing about AirDNA, like, it's a great tool, but I think I was out like $160 or something to analyze the coast of North Carolina because I was looking for a beach home. And so I had to go and buy multiple like jurisdictions or whatever, access to multiple cities in order to analyze it. And it did not feel good. So I'm glad that what you have exists, because I think it'll help a ton of people kind of analyze the short-term rental space without having to fork out hundreds of dollars for the data. And it's really cool how you're monetizing it on the back end too. I think that's brilliant.
Yeah, I appreciate that. And again, I'm a fan of AirDNA. I'm a fan of their model. They, to be transparent with you, we definitely looked into having a similar business model as they do. But we believe that, they're kind of the leader in that space, that being, in a sense, and I don't mean this in a negative way, the legacy subscription platform, they've kind of found their user base. And, it didn't make sense to go down too deep down that path. And we realized, especially with a lot of the conversations that are out there about short-term rentals, are they really as profitable as you hear online? The Airbnb bus conversations. We thought for the entire asset class itself, to make this data available and make it free is just a great education tool that we can leverage, that anybody can leverage to research markets. So, the interesting thing about short-term rentals, I like to say this every time we talk to somebody, is that, hey, Rabu, AirDNA, we can give you really good data points for you to understand what the revenue potential is. But at the end of the day, you as the operator really impact that revenue the most, right? The way you furnish the property, the way you set pricing up, the way you do guest communication. You're not going to have, Brennan, you're not going to have the same property next to each other. We furnish it differently. We have different style of communication with our guests, which is showcased in our reviews. I can generate 50% more than you do just because I'm done 2 or 3 things different and better. So, best way to think about data, whether it's from Rabu or from AirDNA or anybody else, is that we're trying to give you directionally correct path, but then it's up to you to execute it appropriately to get the full benefits of what's out there.
Mm-hmm. I might butcher this, but I'm pretty sure it was Sam Walton, the founder of Walmart, that coined the term "your margin is my opportunity." Right. So his whole thing was, how do I run a business model where I can have the lowest prices, but still be insanely profitable, which Walmart is and has been and still is today. And it's kind of like what you were doing, right? You're going, okay, well, AirDNA charges. If I can do everything for free, then in theory, I can scale faster because people are going to use my platform versus them. I just have to figure out how to monetize it on the back end. And it's kind of interesting that we're having this conversation because that's actually how we built our CPA firm back in 2016 when I launched this thing. And I don't know if our listeners even know this, but back in 2016 when I launched this thing, you could not find tax content online that was thorough, in depth, and easy to digest for the layman. So what you'd have to do is you have to go into like these deep forum posts to like get answers to your questions, which just required a lot of searching and a lot of your time to get that done. And BiggerPockets was a great platform for that at the time and still is today, but you could go on there and ask questions and you could like really engage, but it would take you hours to get answers to your questions. Or the other option was to go and pay a CPA for a consultation and get the technical answers to your questions. CPAs were not, and I shouldn't just say CPAs, tax accountants in general were not giving away in-depth analysis unless you were like Big Four level, which was just way too technical and not in any sort of layman terms that people could understand. And so what we did is we just started writing, and then Tom and I started this podcast, and we just started giving it all away for free. We're like, we're going to do deep analysis, but in a way that people like regular non-accountants can understand. And that's going to be our model. It's very similar to you. It's just like, we're just going to give it all away for free. And what we believe is that people will come to us first, and we'll build a brand of giving all this deep stuff away for free and having great content. People will come to us, and a lot of people will come to us and take it to their CPAs. They'll come to us, they'll DIY their own stuff. But we also think that a lot of people will come to us, they'll listen to what we have to say. They'll believe that we're the experts. They'll also think this is way too complicated. I'm just going to hire you guys. And that has been the secret behind our scale and our growth. So it's kind of like a very similar thing to what you're doing. And I love that type of business model where you can give it all away for free, but then monetize it on the back end, have some sort of cash machine on the back end that actually makes it worthwhile for you.
Yeah, that's 100% right. Very similar approach. We started off spending a lot of time in BiggerPockets communities and the forums ourselves, kind of researching things, trying to get familiar with, how to find short-term rentals ourselves, and then realized, hey, like there's such a big gap here. And at the end of the day, I think our models are very similar. It's in sales, it's the like, trust, buy methodology, right? Like, hey, I like this tool now based on this continued product and value that I've received from this group that I like. I trust them, and now that I trust them, I need a service that's related to them. I buy from them. So very similar mindset. I think, especially with the way everything's evolving, with AI becoming a big proponent of our culture going forward, I think that is the right place to be. You need to earn people's trust, and from there, business opportunities will follow for sure.
Yeah, absolutely.
Switching gears a little bit, I know you see a lot of things in the short-term rental market. There's been a lot of changes going on in certain markets throughout the country. What trends do you see in the short-term rental space right now?
Yeah, I think the trend that we're seeing, and you've seen, in the past couple of months, we've heard about Airbnb bust, right? There was that big conversation at the beginning of 2023. I think it was even within the last few weeks, there was a tweet that went viral that mentioned that in some markets revenue had dropped, or RevPAL, revenue per available listing, had dropped 40%. I think what we're starting to see is some hysteria, some kind of fear from people that short-term rentals aren't profitable, or they aren't as great as they used to be. A lot of people are not doubling down on that, because especially on social and in the media world, people quickly see a little bit of a fire and then throw gasoline at it. But from our vantage point, we're seeing a couple of things from a trend perspective. I think what we're seeing is something that was bound to happen, is that the mediocre properties, the properties that should have never been short-term rentals, they're not performing like they did in 2021 or 2022, when supply was way down and demand was skyrocketing as a result of the COVID restrictions slowly being lifted. So we're definitely seeing some of those lesser quality units perform worse than they did in prior years. But again, that's normal. You no longer can just take any apartment, any house, throw some IKEA furniture or some Facebook Marketplace furniture and then take photos with your phone and expect to generate thousands of dollars. You actually need to become a good host. The properties that have been designed well, that were meant to be good, thoughtful short-term rentals, are continuing to perform really well. Demand is not going down at all. Demand for short-term rentals, demand for travel is as high as it's ever been. I think this past weekend, so we're recording this on July 8th. This past weekend was July 4th travel weekend. TSA recorded its highest volume of passengers flying since 2019, since holiday season of 2019. So people are traveling again. Demand is not dropping. Really, what we're seeing on the short-term rental side of things is, I believe we're starting to see this space, and this is really needed, become professionalized. Not anybody and everybody, and not every property, if any furniture, can be a good and profitable short-term rentals. You really need to run it like a business. You need to make sure that you have a hospitality mindset. You need to make sure that guests are getting a good experience. And if you do those things, you're going to continue to perform well. But we're kind of transitioning from a time of anything works to, hey, you really need to be a good operator to generate the returns that are out there. From an upside, from a return perspective, we're really not seeing much of a drop off at all. Now, with the current interest rate environment, it's a little bit harder to find properties that were cash flowing as well. But even that was bound to happen, right? As more supply came into the market, the returns were always going to be compressed, right? So the days of, your 20% cash on cash returns and, multiple digit cap rates are not as prevalent anymore. And that's okay. This is the same thing happened in the hotel industry. The same thing happened in the long-term rental industry. There was initial kind of great economic times of return from a return perspective that then got compressed to something that was more stabilized, where people were making, mid to high single digit returns. I think short-term rentals are kind of following that path right now as well. So I'm still extremely bullish on the space. I think we're, actually in a spot that was to be expected, that anybody who's a seasoned real estate investor is not surprised by. They're not overreacting. They're realizing this is going to present both opportunities from supply and from a performance perspective. If you make the investment to ensure that you have the right asset and that you're operating it correctly, I think this is still a great asset class to invest into. We're just going through some of those pain points after kind of the high of highs that happened right after COVID to now really kind of becoming the asset class that it was always bound to be.
So at the end of June, and I think we already had this podcast scheduled, so we did not schedule this podcast in reaction to this. It's just kind of all ironic. But at the end of June, there was I forget his name, Nick something on Twitter. He runs this YouTube account that I guess is all like a doom and gloom YouTube account. But he posted this whole Twitter thread on, I forget the data source that he cited. All the rooms. All the rooms. Yeah. And it showed a 40 or 50% decrease in the RevPAR like year over year or something, and Twitter went absolutely nuts, right? First it was like, well, first it was everybody going, "Yay! All the landlords are finally gonna get it," right? Like everybody's that is suppressing inventory, which is a total joke. If you know anything about inventory and you follow any trends, you know that even if all of the Airbnb owners sold at one time, we would still, like if they all sold or put their properties on market on the same day, I think we would get right back to normal inventory or something. So it's not like it would sink the housing market. Anything. Anyway,
right.
That's beside the point. What are your thoughts on that whole conversation about Airbnb's crashing? It's over. They're all doomed because you guys have the data. So was that even accurate?
It was not. And, all the rooms data was referenced in that tweet, and all the rooms has not publicly, at least as of today, as that I've seen, has mentioned anything on that. I'm not sure that was true data from them. I'm afraid that it was manipulated to fit the narrative of that tweet. So I don't even want to say, hey, all the room data was incorrect. I don't want to speak to that. My guess, the more likely scenario is that it was manipulated or cherry picked to a way to make that tweet what it was. The other thing I would say is ourselves, we double checked our data compared to what they had. It was nowhere near the similar kind of from a numbers perspective. Jamie Lane at AirDNA did a really good job following up on that tweet, and I want to highlight it because he did a really good job. I reshared it in my network as well, and even in an update I sent to some of our investors a couple of days ago. He showed AirDNA's data comparatively to the data that was published. And that showed, yes, a little bit of a drop, but it was close to like mid single digit drop. In some of the markets, there's actually an increase in revenue per available listing. So our data was very much in line with AirDNA's. Airbnb also came out and said that their data was nowhere near supportive of that statement on Twitter or that thread on Twitter. So honestly, it definitely went viral. Last I checked, it had like 3+ million views or something ridiculous. But it's just not. It's not accurate. It's anybody who thinks that that's accurate was just looking for something to complain about online and to pour gasoline on. Yeah, exactly right. That's a good way to
so
put
based on your data set, you're not able to replicate what that poster was talking about.
Nowhere near it. A lot of the markets we saw even a little bit of an increase, but everything was within 3 to 5 percentage points plus or minus of what it was last year. Now you also got to realize that this was revenue per available listing. Supply has also gone up, so that obviously impacts things as well because there's more listings than there were a year ago. So again, they were cherry picking data quite a bit to have that narrative.
So their data may not have necessarily been wrong. It just might have been cherry picked or something. So somehow it doesn't tell the full story is basically.
Yeah.
And I saw Jamie Lane's post too. And I think I retweeted that one as well, because I thought it was really well articulated.
Absolutely.
Yeah. So you can absolutely design a data set to show what you want it to show or to confirm what you want it to confirm.
Yeah. The most interesting to me is that all the rooms has not commented on it. It just makes me
why
wonder.
do you think that is?
I'm not sure.
Or something?
I'm not sure. I'm not sure. I really don't know. I'm surprised by that. I know multiple people, even like industry peers, have reached out and not heard anything back yet. So I'm not sure what has happened, why that is the case, what the situation is there. But from all our indications, we do not see anywhere near that data. And one of the reasons industry peers reached out to them is like, hey, can you share your data? We just want to make sure that we're not missing something, but nobody ever heard back from them. So my guess is that this was cherry picked data to fit a narrative, and all the rooms just is not in a position for whatever internal reason to comment on it.
Interesting. Getting back to the more macro conversation. So it seems like a lot of our clients are not seeing any sort of major decrease and they're not concerned about it. The clients that are kind of concerned about it, though, have underwritten their properties that they're acquiring like now based on 2021 information, right? And so I think it's just important to kind of point out that it's what you said. We're getting back to the asset class that it was always meant to be. It's stabilized. It's like the demand during the pandemic was pulled forward. And I think that's what a lot of people are finding out, not only in this space, but really in every industry, especially like in the tech industry, right? We went and overhired a ton of people. Accounting industry did the same thing. we went overhired a ton of people, and then later realized that we were just pulling forward demand because money was so cheap and easy to get a hold of. People were spending, but now we're just going back to a regular market. And so, and we're seeing that in the short-term rental space too. So it's like, and I've seen that even on my own property, my beach house. 2021 and 2022, it's super simple to get it fully rented out for the summer plus off months. Like all you had to do is literally just take photos, write some good copy, throw it up online, and you were done. And now I'm finding you have to put a little bit more work into it. It's not necessarily challenging or impossible. It's just that now I'm finding, you actually, kind of like we said, you have to be an operator. You have to actually put some time into it and try to optimize everything and try to, change those pictures out and everything. And I know some people were already doing this and they're way ahead, right? But I know also a lot of people were like me, where it's okay, I'm going to buy this great property in this great location, throw it up online. Oh, look at how easy it is to rent out. And then all of a sudden in 2023, it's not as easy as it used to be. It's still fine. It's just not as easy as it used to be. I'm finding I have to put a little more effort into getting it rented out now.
Yeah, for sure. I mean, and again, I think all this is normal. And I think those people that are good operators are going to continue to reap the benefits. I think what we're just seeing is an overcorrection, right? We saw an overcorrection to the positive right after COVID in 2021 and 2022. Now it's almost an overcorrection to the negative, at least, on the social media side, right? Where people are just doom and glooming it, peak 2021, 2022, social media was full of Airbnb influencers. They're like, hey, this is how you make money, a lot of money on Airbnb. And they were selling courses and they were selling, dreams, and just didn't make sense anybody who was actually operating it. One thing that we did even through COVID is that, we utilize seasonality numbers, we utilize historical performance in our projections on our tool. So we utilized only pre-2019 seasonality performance numbers in our projections, just because we did not believe that what we were seeing in 2022 and 2021 was indicative of what the market was going to look like long term. So it was almost more of a conservative approach, because in 2021 and 2022, seasonality didn't really exist. You mentioned this, that people were booking at high rates in off months on the beach, right? There's usually a much bigger delta between what you can get on July 4th weekend and what you can get on Halloween weekend, for example, along the North Carolina coast of Wilmington or wherever. So you just have to be smart about how you underwrite it and not get too hot or too cold or on any kind of micro trends that you're seeing.
Awesome. So I think we covered a lot on today's show. So I know you mentioned it before, but if our listeners wanted to check out Rabu, maybe they want to use it for their own, building their own portfolio, where can they do that again?
Yeah, absolutely. Go to rabbu.com, rabbu.com. That's our main site. But if you want to go directly to the tools, go to data.rabbu.com, data.rabbu.com. Again, completely free to use. Love for you guys to use it. Check it out. Send us feedback on the tools. Let us know what you're looking for. We got some really interesting stuff that we have in the pipeline around even giving more and additional data to our users. So excited to share that in the coming weeks and months.
Awesome. So we're going to go ahead and drop that in the show notes for everybody who does want to check that out. Amir, want to thank you so much for taking the time to come on the show again today. Amazing conversation.
Absolutely, guys. Thank you for having me.